Welcome and thank you for joining my Property Circles. My name's Jo Vadillo and I'm going to get started straight away and introduce my other guests here tonight. I'm the Director of Advocate Property Services. We are a property buying service and service Australia-wide. We are property buying experts and have a massive passion to help investors and homeowners get started in the property space. I also run a business called Property Women. It's a national platform. We educate females on all realms of property investing. And further to that, I'm a very proud board member of my Property Circles. Now, my Property Circles, we're going to share a bit about what this business is and how it works and how it can help you get onto the property ladder. And we've also got another guest here tonight that's going to be talking about what's really important when it comes to property is the finance. So it's absolutely key and it's part of the equation, but people sort of do things in a bit of a backward order. It's always important to get those finances sorted. The founder of my Property Circles is Nicola Mills. Nicola is here. She's the founder of the business. She herself has got a number of property circles and she'll sort of share a little bit about how that background is and how it started. She is also a very accomplished entrepreneur. She's been featured in BRW's Fast 100 list and she's also one of Australia's top 50 female entrepreneurs list. Entrance, is that what I should say? Welcome, Nicola.
Thank you, Jo. Great to be here. Great to see people joining us tonight.
And very esteemed company tonight. I've also got our special guest, Louisa Sanghera, who runs Zippy Financial. Louisa looks remarkably well for somebody who's got many years in finance industry. Must be like just the English skin, is it? She's an advisory board member of my Property Circles, an absolute expert in the financial space, and has been able to help people get the finance to get into the property market. And also further to that, she's been awarded Australian Broker of the Year 2019 amongst a number of other accolades. So welcome, Louisa.
Thank you very much. Thanks for having me.
Absolute pleasure. So one of the things I get asked a lot in the space of being an educator in property often comes down to the finance. I mean, people have got the ideas, they've got the inspiration, they can do the research, but sometimes it's the funding of these that makes it very, very complicated for people to actually move forward. So I would love for you to sort of share with us, throughout tonight, a little bit about what's going on in the finance space and my Property Circles, and we'll give you more information about what this platform does mean. But it really speaks to people who want to invest in multiple properties. They may not have enough deposit to get started today, but who wants to wait 2-3 years until they can actually buy a property when you want 2020 prices? It speaks to somebody who might have some money in their super and they've got an opportunity now to do that and to invest that in a safe and sturdy environment. And it's also for somebody who might have an interest in property, yet they don't want to do the hard work. It's very time consuming to find a good property, know where the best space is to invest. It takes a lot of time if you're talking to a bank directly. Banks are busy at the moment, which is probably where Zippy Financial is a perfect position, Louisa, because you obviously have access directly to those lenders as well.
Yeah, I mean, we've got nearly 40 lenders on the panel and it's really interesting. So the banks are taking anywhere from 2 days to 28 days for a pre-approval right now. So it's really blown out in some of the lenders, and a lot of that is around the current environment with COVID. You know, banks such as Westpac, St. George, all the credit managers are based in India. India went into lockdown, they didn't have laptops for the credit managers. So like, it's just, you know, they're the ones that have blown out to 28 days and really struggling. But yeah, it's, if you want a quick deal, we certainly have to look at who can get it done in time.
And that's the beauty of working with a mortgage broker. You've got that insight and those relationships within the banks, and you're the one that does the hard work. I mean, it's in the same way as a property buyer. I'm the one that's doing the physical inspections and I've got access to the software and the relationships with agents. It's very similar, I guess, for you in that space as well. Let's just speak a little bit to property investing now. I might just hand over to you to give us a little bit of a rundown on what's going on in the age of coronavirus.
All right, well, there's lots still happening. I mean, when the coronavirus first hit us as a business, we had 2 really quiet weeks, but it was only 2 weeks. And I think that was the shock and people sort of panicking and thinking, oh my goodness, you know, what's happening? So everybody sort of stopped in the tracks and lots of applications went on hold, but it was really 2 weeks. Since then, things have picked up and we're as busy as ever. In fact, we are so busy right now, I'm actually recruiting extra staff.
Yeah.
So there's just this, everybody's, you know, got the confidence back. I think this last fortnight particularly.
I'd agree.
People are really keen because they can see that there's been a fall in house prices. So, you know, I've been speaking or listening, rather not speaking, I've been listening to the chief economists. I've listened to 3 this week and listening to what all the banks are telling us. And yeah, 5 to 20 is sort of figure. In Sydney where I am, obviously 5 to 10 is the sort of Sydney figure. But there's a fall in prices, and so when there's a fall in prices, that's the time for first-time buyers or first-time investors to get in the market. And what we've seen is that our investors are back in force. They're coming in the droves, the investors, because they're, you know, they're wise and they realise that this is a great opportunity to be buying good properties at low prices. So they're looking to make profit, and they're all back. As are the first-time buyers. And there was something out today about March was actually a record month for first-time buyers and investors. So there was over 10,000 applications went in, which is a massive jump to last year. It's 40% jump to last year.
Oh, wow.
So definitely the first-time buyers and investors are keen to get into the market. Now, what the chief economists are telling us is that this is a small window of opportunity. So they're talking towards the end of the year, house prices will start to go up again. They're talking, you know, around sort of September, October, November. If I was a betting woman, I would probably be thinking, I think we're going to be busy for the rest of the year. Yeah. And I do think from sort of August to December, I think we're going to be flat out. We've got lots and lots of buyers. The stock isn't there. And when the stock isn't there, that's what pushes house prices up.
Yeah. 100%.
So, you know, the buyers are there. So I agree with what what everybody's saying. I think the commentary from the guys in the banks is spot on. I've been doing this for 30 years. So, you know, I bought my first property when I was 18, back in early 80s. And I'm an investor and I've got properties myself. So I think I'm buying one myself at the minute, actually not in Sydney, over in Perth, because that looks to be a good market, I think, to get into right now. But there's definitely money to be made as an investor, I feel, right now. I think it's a great time to be coming in. Interest rates are obviously the cheapest they've ever been. You know, we've got 2.09 on owner occupied and 249 upwards on investment. So, you know, I mean, 249 on investment's unbelievable. And I don't know whether there's still room to maneuver on interest rates.
Yeah.
You know, the banks, with the fourth rate cut that we just had, the banks didn't move at all on variable rates. They left them where they were. They did move the fixed rates down. You know, whether there's room to move still on those variable rates is to be seen. I personally think there is room to move on them. Certainly all my properties are still on variable, but I have got a lot of clients now locking into these cheap rates, thinking that they're happy with the low twos. And if it does go down, they're still happy with the low twos. That's the feedback I'm getting from them.
Just gone one ahead. When you lock in, can you just, if I'm variable, what's my interest rate going to look like? And if I do go with the locked in, what's the variance there?
So there is a variance at the minute. So the fixed rates are the cheaper deals at the minute because they came down with the fourth rate reduction. So the fixed are generally 0.25% cheaper at the minute than the variable interest rates. So it's quite a bit of difference. Like when I'm showing the clients the fixed against the variable, That's why people are tending to, they're locking in because they can see the difference is quite significant, especially on the bigger purchases. But obviously, there's certain features around fixed rates that don't suit a lot of people, like you can't pay in extra money to repay the debt faster. There's no offset facilities, that type of thing. So, the great rates across the board. I've not seen them this cheap since I've been in Australia.
Yeah, absolutely.
The lowest they've ever been.
You mentioned the chief economist sharing that conversation around a unique period in time. Obviously a unique period in history. We're all living globally. But before COVID affected us, we were moving along at a rapid pace. The property industry was buoyant. The beginning part of 2020 was crazy. The brakes were put on. As you mentioned, and I certainly felt this personally and professionally, there was a couple of weeks of like, oh my goodness, what does this mean on a, not even just personally, just globally, what does this mean? And on post-Easter, I think, and Australians have done really well to put changes in place quickly, promptly, mostly well behaved. And we're lucky in that respect. We're really lucky in terms of what's happened. And now people are starting to get their confidence back as well. And so you're completely right in terms of saying that this, if we sort of go back to the way the beginning of the year was moving, now's the perfect time to be really talking about investing. And when I've had inquiries come through and people are recognizing this, even people who are new to the property market, they want to get on board, but we've got a circumstance where some people do have, 20,000 saved up. They haven't got to their 10%. So this is probably why something like my property circles, which Nicola, I'll have you sort of elaborate on in a little bit, but what would be like 20,000 that won't get you a loan.
Look, 20,000 really gets you nowhere buying a property. If you look at the stamp duty costs, and that's something to watch because there are rumours that stamp duty may be going. We'll wait and see. But 20,000 doesn't cover stamp duty. Banks generally want 5% genuine savings deposit, and on top of that, you've got to have your stamp duty. And when you're lending at a large loan to value ratio (LVR), you've got to pay lender's mortgage insurance, which again is like thousands and thousands of dollars. I see lender's mortgage insurance, 50,000 here in Sicily, 80,000. It's ridiculous. So 20,000 doesn't really get you a house these days. Yeah. And that's what I loved about my property circles when I first heard about my property circles, because to me, this is a way in for people. This is going to get them into property. I've got lots of people that have, just can't save fast enough. And the more they're saving, the houses prices are increasing and they just can't catch up with it, and they're just getting away from them. So that's the beauty about this. And not only, are they going to get into one property by going into a circle, they're going to get into a second or a third or a fourth or a fifth. And I love that as well, because that's spreading the risk.
Yeah.
So rather than them, use whatever small deposit they've got to try and put into one property, if they go into a circle, they're going to spread the risk, because they're going to go in and they're going to have these various properties in different areas, different types of property, whatever they want to do as a circle, they'll do. But they're lowering the risk to themselves as well. So I see these as, low risk, low deposits. It's filling a massive gap that we've got in this country. Mm-hmm. I'm really excited to see how my property circle goes. I know from, being a mortgage broker, we're just going to have so many clients interested in this. Yeah. And I've been speaking to other mortgage brokers because I'm ready to get out there and tell the world about it, because I'm so excited about it. But, all the other brokers are saying the same. They're all going, what they're doing? They're going, oh, that's amazing, because we all have people we can't help. And mortgage brokers generally, we love to help people. That's why we do this job, because we love to help people. It's a really rewarding job. It makes me so happy to see people getting the first home or first investment. So, there's a lot of excited people in our industry, looking forward to getting getting in front of clients and discussing my property circles.
Absolutely. So with that, I might move to Nicola and then come back to you, Louisa, so that I can see more people have been joining us as you've been speaking and presenting. And what we've been covering off is about the finance, what's going on with the industry. Nicola, I'd love for you to share a little bit of background with My Property Circles for people who aren't familiar with what we do and what we offer.
Yeah, sure. So this slide that's just come up on your screen now is kind of the steps you go through to start your own circle. And to give a bit of background on how I started my circle, it was back to actually what Louisa was talking about was I was looking to get into property. I took a long-term view that I wanted to have quite a number of properties that I wanted to own in retirement so that they could keep giving me a passive income and I didn't have to work anymore. But you need to start with one, and I didn't have a big enough deposit, and by the time I started saving for the deposit, then the market moves on. Exactly what Louisa was talking about. So I went out to a few of my friends and said, hey, do you want to come in and start buying property with me, and we can share the deposit and we can get going that way. So that's what we did. We met with a really good lawyer and accountant at the time who were really good at what they were doing, and we put our property together. And then that group of friends and I, we've bought 5 properties together, which I'll talk about a bit more. And so now we're at the stage where I'm helping other people do it. So those are the kind of steps you go through. You start a circle of family friends, we get all the experts together, and you've been listening to, well, Joe, you're one of our experts. Louisa, you're one of our experts. You've been hearing them talking tonight about how they help with these circles. The property circle agrees on all the terms and conditions up front. That's really important for expectations on where you're going and what you're going to buy. You split the cost, you share the deposit. So that $20,000 now actually in My Property Circles world is good money. If you were doing it on your own, it's like, oh, it's not enough. But in My Property Circles world, that's good money to put on the table. Then we have circle managers who take care of day-to-day running, and we just keep buying properties. That's the plan.
Yeah, shifting attitude towards property ownership, really, generationally. I think if I look back to the veterans where it was about own one house and own it outright, and it's safe. And then, it emerges now that people are starting to grow their portfolio, but the mindset of having to have 100% of something, I mean, I'd rather have 20% of something and the next year have another 20%. And there is that shifting mindset of the way we share and do things. That consumer mindset's changing on a major scale. So this is perfect. It answers so many questions.
Plus, once you get started, you start to build equity and growth, and you keep going. Like I started off with the view that I was going to have 10 properties, and probably by the time I retire now, I might have 40 or 50. Yeah. Now that might be a share of it, but once you're in, you can keep going, you can put more money in, you can keep buying more properties. But if you just stay trying to save for one property year after year, it slows you down, you waste a lot of time. I mean, once you're in, you can really compound and get moving and use equity. So, and I'll talk, Joe, can I take the screen off you for a minute? It's all right. I'm going to just jump in here and find my little whiteboard. So this is the, and now Louisa, your face is right in front of my whiteboard. I'm just going to move you out of the way. Sorry about that. So this is the situation we have here. This is My Property Circles that I started with my group of friends. So that's got 4 properties there, but we've actually got 5 properties in this property circle. And by the time we bought, so we bought these first 2 properties. I think we only needed to put down $20,000 or $30,000 to get those properties. But by the time we got to this 3rd property here, we only needed about $11,000 to buy that 3rd property because we used the equity in the first 2 properties. And what we also did is we started using offsetting accounts. I think we've knocked about 8 years off this mortgage and about 7 years off this one already, which is really fun to go in and see that getting knocked down. But that's my point about once you get in, you can start using those offset accounts and using equity in the properties you've got to really start to build your portfolio. So yeah, this is kind of the circle we first started. These are the people that came into the circle with me, and you can see there that they all put in different parts of money. So there's that $20,000 that we were talking about before. Louisa, you didn't know I had $20,000 there, so that was good that you mentioned that. So you can go if you like, and I'm just going to pull a little pie chart across here, all equal amounts if you like. So if you need, for example, if you needed $160,000 to start a circle, you know, you might all have to put $30,000 each. But what if not everybody in your group has $30,000? So for instance here, Kelly, she only had $20,000, and you know, other people had $30,000. Some people in your group might be able to put in $60,000. Depends on your friends, right? Some of us have friends who have a lot of money, and we have friends who don't have any money at all. So the point is, you don't all have to put in equal amounts. You can actually put in different amounts. I'm just going to pull this little pie chart here, and you can see the pie chart's different. You just put in what you can put in. If you can only put in $15,000 and your friend can put in $40,000, well, do it that way. What that just means is that, you know, if you might only have a little bit of the circle here, and they might have a much bigger part of the circle, but that's okay. You're in and you're away. And what's happened over the years with us, Kelly here, she could only put in a little bit of money. In fact, she could only put in money for this first property, and she didn't put in any money for the next 2 or 3 properties, and that's okay too. So it's an expectation that you'll put money in every year to keep buying properties, but it's not an obligation. You don't have to. The property circle's there not to put pressure on you. It's to help you grow wealth and build a property portfolio. So, but all that happens is that you end up with a smaller piece of the pie, and somebody puts more money in, they get a bigger piece of the pie. So, but what can happen over the years, if Kelly suddenly life circumstance changes, she gets a big job, she might start putting more money in, and you can put more money in and get a bigger piece of the pie back. So the point there really is that don't really worry about how much money you've got. Just worry about how many friends you can get to come in and help you.
Yeah.
So that's essentially the structure that we had.
Yeah.
For my circles.
Can you sort of discuss a little bit about Holly and that, I guess, that component, which is such a major, you know, idea that you've come up with?
Yeah, so Holly was so I'm going to make her little rainbow because she's a really great friend of mine and a heap of fun. But her husband passed away a couple of years ago, and she's got 2 young girls under 10. And I spent a lot of time speaking with her and talking with her, and going through that process of, you know, where she's going to go and how she's going to grow. So people who are in a position like Holly is that when you're a single mum with 2 kids, part-time income, banks are not lending to you, and you kind of get stuck. You can't get ahead. You can't move. You're stuck. And when I really looked around at the time, I was speaking to Holly, it's not just people who've gone through, in her case, a death. I call it the 4 Ds. It's disease, death, domestic violence, and I've forgotten one. You're going to tell me, Jo.
Divorce.
Thank you, divorce.
It's the 4 Ds, really, isn't it?
The 4 Ds, divorce. Yeah, so life just sometimes throws you lemons, and unfortunately for a lot of women, they get stuck in the situation. So, you know, I said to Holly at the time, hey, why don't we start a property circle together? This is when I was just doing it privately. You can build some wealth, and then you might even be able to get, you know, a property for your girls each by the end of it, you know, build up enough equity and stuff, or at the very least you'll have enough money in there for that to give them a deposit each to, you know, to get their own houses. But what I didn't mention before, Jo, is that, get rid of this money here. Some people have put in cash. Oh, I'm still using my rainbow. And I personally have used my self-managed super fund. And that's worked really well for me because with using my self-managed super fund, I don't notice the money out of my day-to-day savings. Super's already a long-term plan for your retirement. Buying property through my property circles is a long-term plan for retirement. So it suits me really well. You do need to go and speak to your own financial advisor about that. And get, you know, advice on that, but I personally use it. So half the people in this property circle use their super and half of the people use cash. So Holly came back to me and said, I don't have a self-managed super fund. I don't even have enough money in my super, and I don't have the savings. What am I, you know, I can't come into the property circle. So I went away and thought about it, and that's where we came up with Bricks for Chicks. And Bricks for Chicks is essentially, we dollar for dollar match fund. So at the time, Holly said, I've got $5,000, that's all I've got. So that's okay, we'll give you the other $5,000. And each property circle normally goes for about 5 years. We have a 5-year plan. And over those 5 years, beautiful writing, over those 5 years, you hope to buy about 4 properties. So we said, well, we'll lend you that extra money and you don't have to pay us back until the end. And it's when we go and sell all the properties. So when we go and sell all the properties, whatever profit you make out of those properties, pay us back out of the profit. But don't worry about loan repayments or any of that stuff until the end, until you've made profit on those properties, and then you can pay it back then. So that means Holly's now in the property market. And what we're also looking to do for Holly is that she becomes the tenant of one of these properties. So now she's a tenant in a property that she partly owns. Now she might only own a little piece here. I'm going to make that, so she might own this little rainbow piece here, but at least it's something.
Yeah, and it's hers. It's something she owns. So that's really special in terms of just building her confidence back up. And, you know, as a parent, your children look up to you, and it's just so important to be able to lift people up, and especially those females who have been, you know, as a result of death, divorce, disease, domestic violence, all these other things that are hardships. And you know, parking that aside, many women do find themselves in that sort of mid-40s range where they may have put careers on hold, you know, to raise a family, or be the primary caregiver of an aging parent, or many different things. And they've got really poor super to lean back on as well. They've got the education, they've got all the potential in the world. It's just that they are facing, you know, midlife literally, where you kind of go, what's there? And banks don't really like the backstory, do they, Louisa?
No, they don't, sadly. I mean, you know, we have a lot of divorces to deal with, sadly. With the, well, I don't know what the divorce rate is now, but it's high. It certainly is in my book. But you know,
certainly a lot higher now.
On the back of COVID.
Certainly a lot higher now with COVID, right?
Yeah, that's true. But yeah, we have a lot of divorces that come. You know, they take the marital split. The thing is, they stop work to bring up the kids, so that's where they lose the super and everything. And then after the divorce, they might have a bit of cash out of it, but they can't service the debt to get the type of house they want for them and the kids. So a lot do just end up, you know, renting.
Yeah, and
so
they have to
the Bricks for Cheap program's amazing for them.
Oh, absolutely.
Yeah, and the other thing too, I'm going to talk about things that can happen along the way with property. I mean, we've had a situation with this very first property that we bought here, and I call it the Shack, and we had to spend about, you know, $10,000 on a new kitchen and a deck and all that kind of stuff. So, and or right now, if you have tenants in the coronavirus or the COVID-19 global pandemic that we have, I'm not going to pay my rent, which sends a chill down everyone's spine if you're an investor. But if you're in the circle with 5 other people, in this case, it was really only $2,000 each. And you can deal with $2,000. If you get a $10,000 bill, that's a big shock. That's a shock bill.
Yeah.
Maybe you can do $2,000, or even if you can't do $2,000, someone else in your circle might be able to pick up that difference. And I'm going to go back to that pie situation. If you can't put in that $2,000, it just means that, you know, someone else gets a bigger piece of the pie and yours comes down, but you're still participating, and it's fine. So when you get bill shocks, which you sometimes do, I mean, if you're holding onto property for 5, 10, whatever years, you're going to have something go wrong at some point. And with my property circles, you're sharing any costs that come along with others, so it reduces it. Plus the other great thing about it is that property circle is getting rent that's coming in, you're getting dollars coming in all the time, and so you're building up some money in that property circle too. So it's not always taking money out of your own pocket. The property circle becomes self-sufficient.
Yeah, absolutely. Nicola, we've got a question. Someone just said, so I can actually live in the house.
Yes, so you need to, pay market rent. You need to agree to it, but there's absolutely no reason why you can't be the tenant.
Yeah. And what a great tenant, like really.
Yeah, I mean,
Pretty safe there.
If one of our people in this property circle wanted to be the tenant, I'd be a lot happier about that. I know they're going to look after it. They part own it. You know, you hope that you're going to trust that person is going to be a better tenant for you.
Yeah, 100%. I might steal the screen back off you if I can do so eloquently. Let's see how I can do this without breaking the internet. There you go. Look at that. The other thing that I don't think you have mentioned, Nicola, is that people who have been watching tonight's webinar, you're also getting a $500 to go towards their first circle. So that's just them. And if they've got friends or family and they say there's 5 of you, that's a $2,500 kicker into the first property as well, which to Louisa, you know, you're talking about people who have got $20,000, their intentions to buy are there. The market is pretty favorable to make a move in 2020, but that's say you and, you know, a sibling, a friend, or somebody. But it's not always people you know. I guess with my property circles, it can be that someone puts their hand up and says, I want to be a part of this, because we already do have some properties where we've got people are ready to move and we've literally got a seat at the table waiting. So those sort of opportunities come up as well. And Nicola, I know you've mentioned that since you started your circles, people have actually asked, can I be in? Can I get in? Can I get in? So once something's working really well, everyone wants a piece of the pie.
Yeah, that's right. I mean, I've over the years, I had quite a number of people saying, oh, can we come into your property circle? And I was like, no, but I'll start another one with you, which I have done. So, which has been really great, because everyone has different. So our first property circle was what we call a startup circle now, which was just buy low, at lower cost houses, but with good rent and with some sort of feature to it. And now I'm looking at commercial properties, and we're looking at lifestyle, like a lifestyle circle or a commercial property. So I'm expanding now, but I'm used to it. I've been doing it a while. I understand it. So, you know, when people first start off, it's great to just get into a startup circle and get in there and see how you feel about it. And, you know, once you can see it works, and you can kind of move up from there.
Yeah, absolutely. I've got a question here, which is probably for both of you. Melissa's just asking, sorry, I'll go back to the question because I read it a second ago. So Melissa's just asking, should I be focusing on buying my first home or invest in property instead?
I think, well, Louisa probably has some answers to this. I think that depends on your own individual goals. And Joe, you and I talked about doing a webinar exactly on that, where we talk about your individual goals and what you're trying to do, and really what age you are now and what that means. So when I first started, you know, I had a view that I wanted 10, 15, 20 properties. That's what I was going to do. And I'm a rent investor. I'm happy to rent. I like to rent in really nice houses, and then I go and buy property. But that's not for everybody. So it depends. If you really want the security of being in a home and knowing it's yours, do that first, and then as you get some money, start doing these property circles and start building some wealth and equity. But if you're happy to be a rent investor like me, then go with a property circle first, because you can build up some really good equity and cash, and you can probably get a nicer first home than if you did it the other way around. So my property circles, like I said from the beginning, is a way to kind of start building your wealth quicker. But if you're someone who really wants that security of your own home, then that's for you. And I mean, that's where you really do need to go and talk to different people and really sit down and work out what your own individual goals are.
Yeah, absolutely. I thought I would share also just some of the properties that we've talked about, and when we're looking for properties for circle members, and this is for investors. So we've got that opportunity where you might already have a property in mind and that you want people to come in and buy something. So it could be that you're born and raised in Newcastle and you want back, and that's one formula we could look at. Or it's literally just a non-emotive financial decision, and that is that you buy property in an area that represents strong growth, great infrastructure, high demand for rents, and also rental yields are really strong. Because I know, Nicola, when you mentioned before that you've been able to erode some of your mortgage because of the money's so yeah, I mean, that's fantastic. It's sort of 8 years is just a number, but when you actually look at the interest saved, it's astounding how much you can actually save over a period of time. And that's from very small contributions on a weekly basis, but over time, it saves you tens of thousands Correct me if I'm wrong on that number, Louisa, but it can certainly save you tens of thousands of dollars, you know, on the lifespan of a mortgage. So the properties that we'll be looking at are all in capital cities, major regional hubs that have got a multitude of employment opportunities as well. I've just got a couple of examples here because I wanted to sort of show what that budget of, say, the mid fours to the, you know, up to 600,000 seems to be the sweet spot for many investors. And we can definitely buy properties that are, you know, strong performers, great depreciation benefits also, but not only that, but it's the yield. It's a 5.3% on one side, 6.7%. And the one that I've got here on the right-hand side in Moreton Bay, which is just north of Brisbane. And those properties are called dual key properties. So you've got the two incomes coming in under the one roof. So it's effectively, you've kind of got a granny flat with a, you know, on the other of your house. So it suits tenants. Someone might want a small yard and they don't want to live in a unit block. It's a perfect solution for many investors. And in terms of the returns, they're so strong. I mean, talking 6.7%. But, you know, I've got some people at the moment, because like you're saying, Louisa, sweet spot a time. We've got some people in the builders that are offering 7% rental guarantees for 2 years. And after that 2 years, we're talking about going down to 6.7%. So it's really a no-brainer, safe portfolio step, really, for anybody. And that 501,000 with the 2,500 gift that my property circles have got, you and 5 friends can really get into a really strong performing property here. And that can be your foundation step. And then rinse and repeat. Do it next year. Do it next year. But don't wait 5 years to save 100 grand is probably the message that I want to pass on to people, that they do have that mindset. And I did just have a question pop up, and I apologize, I haven't actually asked it, and I'll just move that aside. I just had the question, I only just caught it. Would I lose my first homeowner's grant? So, Nicola?
No, you wouldn't.
What was that, sorry?
You can answer that, Nicola. No, you wouldn't.
You wouldn't?
So, no, we checked that out, and with the Office of State Revenue, Nicola already knew the answer to that one, but they did come back and confirm to us as a brokerage that, I mean, the people buying into these, it's all, the structure is through a unit trust, so you're actually buying units, and because you're actually buying units in a unit trust, they're not classing that as you actually sort of purchasing into a property. So you're still going to get your first home owner's grant, you still get your stamp duty concession. We have got the first home loan deposit scheme in place now. I mean, I personally haven't checked that one out, but I think it'll come under the same rules. So I don't think it's going to affect you not getting all your first homeowner grants, as and when you do decide to buy your first owner occupied property.
Yeah. And just going back to the question before about, should I be focusing on buying my first home or invest in property instead? Well, go into a property circle and become the tenant of one of those properties. So you're not 100% the owner, you might be 20, 30, 40% the owner, but you're kind of halfway there, and you don't lose any of those first home owner deposit, stamp duty, all the benefits you get. Yeah. And then you can go on and buy, if you want to buy outside of the property circle on your own, then you can. So the first step might be, get into a property circle and become one of the tenants of one of the properties that you part own.
It really lends itself then to a formula. Like, say if it's yourself and a partner are looking to buy your first home, you've got some savings, you can literally go into a few circles. That money's going to work for you so much harder when placed in a property than it would be if it's in a term deposit. So then you sell out and you bring the money back to home, whether that's, whatever, wherever you are, and it really puts you in a really good position, and then you still qualify for those other grants that are available.
And that's where you'd use cash instead of self-managed super, because you can use you got more flexibility with that cash. You can pull it out, put it into other properties, do that. Really, if you use a self-managed super fund, and again, your financial advisor will talk to you about this, but you really are investing for that long term, and you can't use that money for your own property. So if you're looking to invest into my property circles to pull that cash out to buy 100% on your own, you might be better off using cash or part cash, part super.
Understand. Yeah, absolutely. So this is a perfect example. So one of the questions that people have asked is about managing property when you're buying with, look, even if it's a sibling, there's still that sort of conflict, and who's managing it and who gave authority to have the lawns mowed and blah, 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 blah. but this is one of the partners of my property circles, which is your Bonza. And Nicola, what we're looking at here, this is actually your portfolio, isn't it?
Yeah, so this is my little original property circle. So your Bonza do a great job. So what we're doing with my property circles is we're working with companies that are cutting edge technology, who are, you know, disrupting their industries, and really so we can provide transparency. So when you come on, you really can go in and start buying your properties almost online. You probably have to spend a bit of time with Louisa. She's got to ID you and do all sorts of, you know, tricky stuff she's got to do. But essentially, you can go and look at your property portfolio, have a look when the rent's coming in, are they tenanted, are they vacant? You can see there on the left, it's like, are there any repairs and maintenance? You can look at all your documents. It's just a great way to keep everything in one place. Everybody can go and have a look at what's going on. You can go and have a look at your properties anytime you like. So yeah, so we're working with suppliers that really help with that. I'm going to actually steal the screen back from you again, Joe. That's all right. I just want to go back to my scribbles here. But if you can just have a kind of quick look over here on the left-hand side. I kind of didn't talk about our experts. So one of the key lessons I learned in buying these 5 properties that we've got here is that we bought one property that maybe breaks even for us if we're lucky. So the other 4 properties are doing really well for us, and we're really happy with them. But we didn't have a property buyer, and we bought this property. And it hasn't done so well for us. So the lesson I learned from that when I was doing this privately is to get some experts around you. And Joe, you're one of those experts in property buying. So we use now, and I'll go back to the people on the left, we have a circle manager. The circle manager's job is to make sure that they coordinate the accountants, the lawyers, the mortgage brokers, the property buyer, the property manager, like your Bonza, the bookkeepers. Make sure you have insurance. So in situations like the coronavirus crises, insurance has saved us from losing money. So we make sure that we get all the right people around the circle doing all the right things to keep it safe and moving along, mitigate any risk or loss, and hopefully enhance and really build that wealth for you in those property circles. So those experts are really, really important for us. It was a big lesson I learned from my first property circle. Yeah. So I'm going to give you that screen back, Joe. I'll stop sharing here.
So, well, you know, it's a perfect point you make, though, that whole, so I'll get that again. Back to there, here we go.
Yeah, so this is one of our experts, your Bonza, and so it's a great way to look at your properties through the portfolio. And Joe, you were just going to talk about the rest of our partners there.
Oh yeah, no, I was going to say that it seems like a big menu to read, but I can't stress how important it is to have the right team around you when you're property buying. Like, it's really, really important to have people, because they will do a lot of the hustle for you. You know, if you're working, if you're busy, if you're time poor, if you're not familiar with it. You know, most people will not buy a multitude of properties in their life, yet I do a multitude of properties in a year. So, you know, it's just those little points. But one thing I think you probably didn't mention was the fact that when we form these circles, they are not costs over and above what you're talking about. They're actually costs that are all inclusive. So you do get access to the teams here. We've got, as you know, the buyer's agent, you've got the mortgage broker, you've got the legals. All of this is covered in that initial deposit that you have when you're buying the property, and then the ongoing admin fees. I mean, honestly, for the amount of problems that I have seen people when they haven't done correct joint venture structures, like you said, you know, you buy a bad property 100% to yourself, that can set you back 5 to 10 years. Yes. Trying to get back and recoup. I mean, if that, you know, it really can set you back financially, very detrimental. So everyone that you see here on this page are partners that are known to us, trusted, that we've worked with, and they've come recommended through clients and other professionals that we work with. So it's really important to surround yourself with a really strong team as well. I know we've had a couple of questions along the way, but if you did have any further questions, by all means, jump into that chat right now and you can ask as well. I did mention the $500, so that's for yourself. 4 best friends, you got, yeah, there's your launching pad right there. It's $2,500 towards that first property. It's to secure something before the end of the financial year. Obviously, people have got questions that are very personal and they want to keep that confidential. So I'll share also with you what that looks like in terms of reaching out and making an appointment so you can speak to either myself or Nicola, or if you did need to speak to Louisa about the finance side of things because your circumstance might be a little bit more unique. And it certainly happens as you get older, you're less vanilla, you know, like a couple of kids, couple of ex-husbands, it all gets a little bit more clunky when you're trying to piece together your financial position. Yeah, so mypropertycircles.com is the website. By all means, follow us on Facebook as well as Instagram. We're going to be sharing opportunities that come up. So, you know, we've got an example of people, there's a group of 4 at the moment. They're looking for a 5th person to come on and buy a property. These sorts of formulas are happening. Perhaps you really want to invest in an area that you just have real faith in and you need to get some people on board with you. And by all means, let's find out how we can help you start a property circle. I think we've sort of covered everything and I think we've made good time. Let me double check. Yeah, we did it. Thank you so much. Thanks, Louisa, for joining in and sharing that insight. I know you're very busy. I know when we're finishing up, you're probably going to go back to work for several hours.
Yeah, just for another 5 or 6 hours.
Crazy lady.
We've got a question that's just come in, Jo.
Oh, Louisa, you do have a question, so you're not off the hook yet. This lady's a stay-at-home mum with 2 investment properties. Do you think I would have a chance to refinance if I don't have a job? No?
Probably no.
Yeah.
But yeah, no. They when the bank's assessing you, when the bank's assessing you, they're looking at your income and then they're looking at your outgoings and your debt. So they're looking at your living expenses, your credit cards, any loans. They'll also look at some of them are still taking some of the government money that you'll be given. If there's an agreement in place with the next partner, if there's children involved, you know, we can take the child support, but there's got to be generally an income for you to be able to service the debt.
So Diana would be great to talk about a property circle, because if she can come in with some other people who have serviceability and equity, then it might be a way for her to keep buying property with others.
Yeah, certainly. And I know we sort of just discussed the startup circles, that, as I said, that sort of investor 450 to 600,000, but you know, this is not limited to that formula. It can be that you want to do a renovator property, flip it with some friends. That's something that came up in previous webinars. It could be that you want to do a little small development. So there's so many different things that the scope and the opportunity here is there. And obviously we're here to be able to help and see if we got the questions or solutions to something that you might have to share with us. Please reach out. Nicola would, you know, we'll have a consult with you one-on-one and be able to see if we can help you as well. With that said, I'd like to thank everybody for choosing to spend tonight with us. It's been an absolute pleasure. For those of you on Facebook land, thank you, thank you, thank you. And that's over and out for me. And thank you for joining us.